Again, a pleasant afternoon to everyone who have joined our webinar for this week. This is Miss Kurt starting today's webinar, and again, I'd like to thank you for allotting your time to join us right now. June 1st, 2023 will be the commencement of corporate tax. As there is less than a month left before this, it is very important for business owners to know their obligations to ensure proper compliance. Just recently, the explanatory guideline for corporate tax was released, which outlines in so far the specific informations on different aspects of corporate tax, scope, implications, and its administration. As an FDA-approved tax agency, our team of experts plans to discuss and share insights on explanatory guidelines that was released by the authority. For today, we plan to give you a brief background of its coverage, and the collection of webinar will then be continuously conducted to discuss each and every aspect of the corporate tax law in a more detailed manner. As usual, I will be starting by discussing the relevant topic for today. I will then be joined by Ms. Mariam and Mr. Muhammad Sharik to address the questions and clarifications that you will be having on the latter part of this session, wherein you may send your questions and clarification on the chat box below. Okay, so as what I have mentioned, the first part will be discussing just a brief coverage of the explanatory guidelines that was recently released. And then this would be followed by maintaining of financial statements by discussing the categories and the financial records to maintain by your company, the qualifying free zone person like the rates, limitations, and condition, and a brief about transfer pricing rules. The explanatory guide on corporate tax law basically consists of 20 chapters, wherein it tries to cover everything the administration and implications of the corporate tax. So the first chapter refers to the general provisions of the corporate tax laws, wherein they have explained the guidelines and the definition of important terms to be used on the corporate tax and would be mentioned all throughout the corporate tax law. It was followed on the second chapter by the imposition of corporate tax and applicable rates. So on this specific chapter, the guidelines have discussed the implication, the general obligations as well of the businesses like filing of returns, payable, the self-assessment basis, and the tax rates that would be applied, like the standard rate and vote for qualifying free zone as well, and the threshold that would be considered on identifying the tax rate that would be applied. So Chapter 3 discussed about the exempted person or the 6 exempted entities that the law has specified. So exemptions from corporate tax are provided for particular categories of persons where there are a public interest and policy justifications for not subjecting these categories of person to taxation. So the exemption for corporate tax provided under this chapter is so-called as subject exemption that excludes the relevant entity from being within the scope of corporate tax. So this is followed by the taxable persons and corporate tax based on chapter 4, where they determine which persons are subject to corporate tax, and they have categorized it to two category, which is the resident and non-resident persons. And they have also discussed how non-resident persons would fall within the scope of corporate tax, either through the permanent establishment or through deriving state source income. On this chapter, they have also mentioned investment manager exemptions, partners in unincorporated partnership, as well as family foundation. The chapter 5 focuses on the free zone persons, wherein they have explained the conditions or criteria to be able to be considered as a qualifying free zone persons and the possible elections that these free zone entities can do to be subject to the standard rate of the corporate tax. Please let us know if the voice is audible. All right. So to continue with the chapter 6, which specifies the calculating of taxable income. So actually, most businesses in the UAE are required under applicable federal or emirate level legislation to keep records and financial statements reflecting the assets and liabilities of the entity or businesses, as well as the profits for the relevant financial period, which need to be prepared in accordance with the accounting standards accepted in the UAE. So this specific chapter clarifies that the accounting net profit or loss before tax, as stated in the financial statements, must be used as the starting point to calculate the taxable income for a tax period, to which the following or necessary adjustment would be made to be able to determine the final taxable income for a business. On this chapter, they have also mentioned regarding the small business relief, on what conditions could claim this kind of relief and the limitations as well upon claiming the small business relief. Chapter 7 focuses on the exempt income. So the purpose of the exemption from corporate tax for the types of income that would be mentioned in this chapter broadly is to prevent income derived from the activity of another resident or non-resident juridical person or a foreign establishment of a resident person from potentially being subject to economically or juridical double taxation. Chapter 8 focuses on the reliefs that a taxable person could claim under the corporate tax. So this specific chapter provides for corporate tax neutrality where one or more assets or liabilities are transferred between closely related taxable persons defined as qualifying group. Again, please let us know if the voice is audible or if it is breaking. Okay, I think the audio is fine now. Please just message us if the voice is still breaking, so we'll have it checked immediately. So, continuing, Chapter 9 focuses on the deductions or the expenditure deductions that are allowable in computing the taxable income. So it also sets out the circumstances in which expenditure is not allowed to be deducted, as well as the general limitation on net interest expenditure of deduction. Chapter 10 relates to transactions with related parties and connected person. So generally, it discusses about the transfer pricing documentation, arm's length principle, related parties and control, as well as payments to connected person. So this is followed by the tax loss provisions in Chapter 11, where it discusses about the tax loss reliefs, transfer of tax loss, as well as limitation on tax loss carried forward. So generally, the corporate tax load allows tax losses incurred in one tax period to be offset against the taxable income of a subsequent tax period under certain conditions. So these certain conditions were specified on this chapter, and also it outlines the limits, the amounts of tax losses that can be utilized to reduce the taxable income for each tax period. Chapter 12 provides provisions regarding forming of tax group. So it specifies the conditions or criteria, like for example, having the same financial years and adopting the same accounting standards within a tax group. The resident juridical persons that made up the tax group are treated to be as a single taxable person for corporate tax purposes. Chapter 13 focuses on the calculation of corporate tax payable, wherein they have discussed about the currency to be used in preparing or maintaining the financial statement, withholding tax and withholding tax credits, and foreign tax credits that may be considered on determining the taxable income of the taxable person. So this is followed by Chapter 14, wherein they have specified the outline or the guidelines for payment and refund when it comes to corporate taxes. So as it was already mentioned before, the deadline of payment for corporate tax is 9 months from the end of the financial period or the relevant tax period. So it is necessary to allow for refund in cases where a taxable person have overpaid and are owed money by the authority. So circumstances on which the authority will consider for refund is also specified on this specific chapter. Anti-abuse rule is discussed on chapter 15. So any tax system can create incentives and opportunities for taxpayers to alter their behaviors to reduce their tax liabilities. So under most circumstances, such behaviors are acceptable as taxpayers are permitted to optimize their tax position in a manner consistent with the purpose and provisions of the legislations. However, in some cases, taxpayer may seek to reduce their tax liabilities in a way that is not consistent with the original intent or the purpose of the corporate tax law, which could be considered as abusive, and it is intentionally common for tax laws to introduce rules designed to curb such behaviors. Chapter 16 specifies the guidelines on tax registration and the registration as well. So generally, all taxable persons are required to register for corporate tax purposes. This must be done within the timeline that the authority would be specifying and in a form and manner that would be prescribed by the authority as well. This also this chapter specifically mentioned as well the basis on which an entity could file for a deregistration, whether the business was already discontinued or the company is already liquidated. Chapter 17 discusses about the tax returns and clarification. So this specific chapter specified the dates of filing, the minimum information or the information that would be required upon filing the return of the company on an annual basis. Down to chapter 18, where it discusses the violation and penalties. Corporate tax is normally self-assessed, which means that the responsibility for calculating the taxable income and the corporate tax payable in the first instance rests with the taxable person. So, in order to ensure the proper functioning of the corporate tax system, it is necessary to empower the authority to issue and impose administrative penalties in respect of failure to comply with the obligations set out in the corporate tax law. Chapter 19 refers to transitional rules in respects to corporate tax, such as maintaining of arm's length principle, as well as the anti-abuse rule that was mentioned on chapter 15. So on the last chapter, it discusses about the closing provisions such as the delegation of power of authority. Authority will determine the administrative policies, process, and procedures in respect of the compliance obligation and requirements imposed on a person by the corporate tax law. So they have also mentioned the cooperation from taxpayer to provide necessary documents, revenue sharing, and internal agreements correlating to corporate tax. So these are the 20 chapters that was explained on the explanatory guide released by the authority in relation to corporate tax law. Now, we will be proceeding with regards to maintaining of audited financial statement. So as per the Ministerial Decision number 82 of 2023, the following taxable persons required to prepare and maintain audited financial statements are taxable persons with revenue exceeding 50 million AED during the relevant tax period. So they have also mentioned that qualifying free zone person must maintain audited financial statement as well. So this is in line with Article 54 of the Corporate Tax Law, specifying the financial statement that must be maintained by the taxable person. Generally, taxpayers are expected to prepare and maintain financial statement for the purpose of calculating their taxable income and should maintain all documents and records that support the information in the corporate tax return or any other filing made with the authorities. Exempted persons are also required to maintain all records to support their exempt status. So, having an independent third party examining the financial statement of certain categories of taxable persons provides an additional layer of an oversight of the quality of the financial information that was shared or to be used for corporate tax purposes. So on the next slide, we have specified the notes for maintaining of financial record for the company. So as the standard, the financial statement should be prepared in accordance with the accounting standards accepted in the UAE. So generally, International Financial Reporting Standards or IFRS is the most frequently used accounting standard here. So for the records must be maintained for at least 7 years. This should include information supporting the tax return that was filed with the authority and records that enable the taxable person's taxable income to be readily ascertained by the authority as well. When it comes to tax groups, they are required to have consolidated financial statements for each subsidiary for the relevant tax period. So for the purposes of determining the taxable income of the tax group, the parent company shall consolidate the financial result, assets, and liabilities of each subsidiary for the relevant tax period, eliminating transactions between the parent company and each subsidiary or member within the tax group. The next topic that we would be discussing is regarding the qualifying free zone person. So, qualifying free zone persons are entities established in a free zone that meets the conditions to benefit from the free zone corporate tax regime or the qualifying free zone persons as what it was quoted, which will be subject to UAE corporate tax at the following rates. So for qualifying free zone persons, 0% and 9% tax rate would apply to them. 0% would be applied on incomes which would be falling under the qualifying income. Other income that does not meet the qualifying income would be taxed at 9% rate. So for qualifying income, actually the conditions for this one are yet to be clarified by the minister. Although tax incentives were there for qualifying free zone person, there are some certain limitations that would be applicable to them. These are, for example, transfer within the qualifying group would not be allowed. So usually, companies that are part of a qualifying group can transfer assets and liabilities between themselves at their net book values. So this means that the transfer can be carried out tax neutrally, wherein no gains or loss needs to be taken into account in determining the taxable income in relation to the transfer. So this specific transfer within qualifying group would not be allowed for qualifying free zone persons. Small business relief will also be not applicable for qualifying free zone persons, as they have mentioned that for businesses claiming small business relief, it should not be an exempt person or a member of a qualifying free zone person. So for transfer of tax loss, a tax loss or a portion thereof may be offset against taxable income of another taxable person. This transfer of tax loss, it will not be allowed to qualifying free zone persons as well. And tax group also would not be formed if there is any qualifying free zone person between the members of the group. So for a free zone entity to be considered as a qualifying free zone person, the corporate tax law have specified four conditions that has to be met. So the first one is that the free zone person must maintain an adequate substance. So this could be in relation as well to the economic substance test wherein they have mentioned that the relevant income must be in correlation with having an adequate number of employee, having an adequate operating expenditure, as well as having adequate physical assets in the states. The next condition is that the free zone person must derive the qualifying income, which is yet to be clarified by the authority. The free zone person must also not have made an election to be subject to corporate tax standard rate. So qualifying free zone person have an option to do an election to be subject to the standard rate of corporate taxes. Lastly, the specific free zone person must comply with transfer pricing rules and necessary documentation. So transfer pricing rules, we will be discussing this on the following slides. Transfer pricing rule seeks to ensure that transactions between related parties and connected persons are carried out on arm's length terms as if the transaction was carried out between independent parties. So, transfer pricing aims to promote transparency and fairness in the UAE's tax system. To prevent the manipulation of taxable income, the corporate tax law have provided various articles which require the consideration of transactions with related parties and connected persons needs to be determined reference to their market value. Market value, it refers to the price which could be agreed in an arm's length pre-market transaction between persons who are not related parties or connected persons in similar circumstances. It could also refer to an asset, service, or benefit provided is the value that the asset, service, or benefit would ordinarily have in an open market at the time and place of transaction taking place. Transfer pricing rules will apply to all transactions with related parties and connected persons. Therefore, any loan obtained from to or a related party or connected persons need to be at an arm's length principle. Related parties is can refer to an individual. Related parties refer to an individual relatives could be on fourth degree of kinship, as well as companies in which the individual alone or together with the related parties has a controlling ownership, typically 50% or more shares of the company. On the other hand, connected person can be defined as someone who is an owner of the business, a director or officer of the business, or a related party of either of the two persons that I have mentioned. So under these transfer pricing rules, the taxable person may apply any of the transfer pricing methods other than the methods listed in this specific article on corporate tax law. So on corporate tax law, they have mentioned five methods which could be used for transfer pricing purposes. These are the comparable and controlled price method, the resale price method, the cost plus method, and the transactional net margin method and transactional profit split method. So on selecting which method could the company use, there are several factors that must be considered. So these are the contractual terms of the transaction or arrangement, the characteristic of the transaction or an arrangement, the economic circumstances, the functions performed, assets employed, and risks assumed by the related parties entering into the transaction, as well as the business strategies employed by the related parties entering into the transaction or arrangement. So taxable person could also choose a pricing method other than this method where the taxable person can demonstrate that none of the above or mentioned methods can be reasonably applied to determine an arm's length result and that any such other transfer pricing method used satisfy the conditions on this article. Also, the authority examination as to whether income and expenditure resulting from the taxable person's relevant transactions or arrangement meets the arm's length standard shall be based on the transfer pricing method. Sorry, please let us know if the voice is audible or if it is breaking. So continuing with transfer pricing necessary documentations. Businesses will be required to maintain information regarding their transaction with related parties and connected persons. And certain businesses will be required to submit this information along with their tax return. Upon request by the authority, the taxable person shall provide the authority with any information to support the arm's length nature of the taxable person's transaction or arrangement with its related parties and connected persons within 30 days following the request by the authority. So on the recent ministerial decision that was released, which is the ministerial decision number 97 of 2023, they have specified the businesses that shall maintain a master file and a local file when it comes to transfer pricing documentations. So the first one is a constituent company or the members of multinational enterprises group and taxable persons as well with revenue of 200 million AED will be required to keep or maintain a master file and a local file. The ministerial decision have also specified the transactions or arrangement with related parties or connected persons to be included on the local file. So these are non-resident person, exempt person, resident person that has made election for small business relief, and a resident person whose income is subject to a different corporate tax rate from that applicable to the income of the taxable person. The taxable person shall not include transactions or arrangement with the following related parties and connected persons in the local file. So these are a resident person aside from points 2 to 4 that was mentioned on the presentation, as well as natural person and juridical person provided that the parties to the transaction or arrangement are acting as if they were independent with each other. So on considering whether the parties are acting whether they are independent of each other, two conditions have to be met. So this should be the relevant transaction or arrangement is undertaking in the ordinary course of the business, as well as the parties are not acting exclusively or interacting almost exclusively with each other. That's to give brief for the obligations that would be set up in terms of corporate tax. So you can now send your questions on the message box and we'll have it addressed on the second part of the webinar session.
Hi, everybody. The first question we are taking is from Mr. Hub. Need registration on FTA for corporate tax? Yes. FTA has a Tax portal, and all the companies need to register for corporate tax. The next question is from Mr. Sally. When was the guide released, and who was it released to? So basically, the guide was released by Ministry of Finance today itself. It was released to public. Same another question from Mr. Sally. What is the qualifying income? So as we've already discussed, qualifying income will be the income on which qualifying free zones can apply 0% corporate tax. But the main conditions of which income they can qualify under the qualifying income free zone exemptions will be issued in later by the Ministry of Finance.
The next question is from Mary Janice. Can we request for a copy of your presentation? So instead of the copy of presentation, actually this specific webinar session would be uploaded as well on our YouTube channel. So the same link will be shared through email. So the next question is from Mr. Muhammad. What is the deadline for the registration? So registration must be done before doing the first filing for your company. So for example, your company has the financial period of January to December. So the first tax period for your company would fall on January 2024 until December 2024. And filing for of the returns would be until September 2025. So at the same time, you would have to do the registration before filing for the returns of your company.
Answering Mr. Afra's question, you can form a tax group under corporate tax, but they will be subject to certain conditions. And unless do not meet those conditions, it is not possible to form a tax group under corporate tax. And yes, you have to register through MR Tax itself. And if you need any kind of assistance, we are here to help you. You can get our information from the slide on the screen, and you can contact one of our team members for further assistance on how to go about this process. Question from Mr. Paul. So he has mentioned we manage a number of offshore holding companies from our company in DMCC. Our DMCC company invoices each of them for its services, and I assume will be subject to tax above the threshold. In relation to the offshore companies, if we hold their board meetings in Dubai, does that bring them within the scope of UE corporate tax? First of all, this information is not enough to give a suggestion about the corporate tax applicable for your holding company. But yes, any income the DMCC company is earning will be subject to corporate tax unless they meet the exemption. Next question is Mr. Naveen. When is CT applicable for financial year 2023 or financial year 2024? It depends on when your year is starting. If your financial year starts in June, then your first financial year will be June 2023 onwards. And if it starts in January, then the first financial year applicable for corporate tax will be starting from January 2024 onwards. Next question from Mr. Deepak. When will have a clarity about the qualifying income? So we are also waiting for any publication from ministry regarding this, and hopefully very soon, because they are already publishing clarifications on many different areas of corporate tax till now, and this is the major area which is remaining, and we are still also waiting from a directive from ministry regarding this, and we'll keep you posted when we receive one. Another question from Mr. Naveen. What is the threshold of income and profit for filing corporate tax? So to clarify everyone, there is no threshold for filing corporate tax. All the companies need to file for corporate tax every year. The threshold applicable is only for the rate which will be applicable to your income or profit. And secondly, if you want to avail small business relief, then only the threshold will be considered. Otherwise, filing is regardless of what income or profit is being earned. Next question from Miss Valeria. What things can be written off from the corporate bank account and what cannot? How will it work with taxes? I think we need further clarification on your question because we do not understand what you're trying to ask here regarding corporate tax in this scenario. Next question from Mr. Mother. I think we already answered, but what is the deadline for a registration, corporate tax? As such, the deadline is before your first filing, as explained by Ms. Kurt, but we recommend filing as soon as possible. From Ms. Mirna. Hi, at this point, should we consider tax incentive holiday that the free zone has? Again, the same, it's related to qualifying income itself. So we're waiting for further clarifications on what conditions will be applicable to qualifying income. And if the person in the free zone meets those conditions, then they can certainly avail the incentive holiday given to these free zones.
Hi everyone. We have a new question from Swati. Is there any website by the government or book which we can refer to English to get a better understanding? Yes, there is. You have to go through the tax.gov.ae FTA website. You can find all the materials, all the publication, most of the publication, and cabinet decision you can find in FTA website. The next question is from Ms. Silpa. Are we going to get any link or notification from the FTA directly for registration? Yes. Most of the companies start receiving the notifications from the Federal Tax Authority on their registered email ID and their mobile number. But you can do the registration by your own or one of the tax agent and agency, FTA approved tax agent and agency. They will help you to do the registration. The next question is Baba Femi. For those have already registered for VAT, is there need to do another registration for corporate tax? Yes, you have to register again for corporate tax. VAT and corporate tax are both different taxation. You should register separately. Next question from Siraz. Even those companies which earning less than USD 100,000 to be registered for, yes, all the companies needs to register in the corporate tax if they have a company inside the UAE, if they have a permanent establishment inside the UAE, they needs to register regardless of their income. There is a no as such threshold for the registration. Similar question from Angelica. Do all companies require to register for corporate tax even if they are not generating the minimum revenue? Yes, you have to register. Again, the same answer. If you have a permanent establishment inside the UAE, you should register in corporate tax, regardless of their region also. Even you are in a free zone, mainland, you have to register. Next question from accounts. For the financial period April to March is applicable for corporate tax this year? No, for financial year from April to March, their first corporate tax will be start from 1st April 2024 until 31st March 2025. So it will be not applicable for 2020. It will be applicable from 2024 onwards. Next question from Shilpa. Qualifying income rule is only applicable for free zone companies or even for mainland? So qualifying income rule is only applicable for free zone, not on mainland. Next question from Mairana. Has it been announced that only qualifying free zone needs to register? What if the free zone person has both qualifying and a non-qualifying revenue? So again, for registration, there's a no exemption for regardless of their region, whether it's a free zone or qualifying free zone person or non-qualifying free zone person. Everyone needs to register. If you have the permanent establishment inside the UAE, even in free zone, even in qualifying free zone, non-qualifying free zone, every company needs to register. Each and every entity needs to register in the corporate tax. The second question, what if the free zone has both qualifying and non-qualifying revenue? In that case, we are still waiting for the cabinet decision, but most probably there will be a different rate for qualifying free zone, qualifying income, zero rated, and non-qualifying income, it will be 9%, the standard rate. Next question from Umesh. All the free zone companies needs to register for CAT. Yes, all the free zone company needs to register in CAT. Only there is a few exemption, government entities and government control entities and extraction businesses. There are certain in type of entities are exempted. A part of that, all the entities, all the free zone entities needs to register in the corporate tax. Next question from Mohammed Kuti. What are the documents needs to CT registration? Uh, Mostly all your legal documents, entity legal documents will require, or if the person is natural person, so that natural person documents will require in order to do the CT registration. And if required, the authority will ask some financial also. It's totally depends upon authority, but in general, mostly the legal documents.
The next question is from Mr. Simon Vergese. What are the immediate actions a company to take now in preparation of corporate tax? So as I have mentioned on the previous slides as well, the companies are expected to prepare a proper book of accounts for them to determine the taxable income for that company, as well as necessary documentation such as those transactions relating to transfer pricing. So you must keep as well necessary documentation when it comes to transacting with related parties or connected persons. Next question from me. Meaning we will start the financial statement of 2023 January to December, and the submission is on September 2024. So again, the tax period of your company would depend on the financial year that your company is following. If you're following the financial period of January to December, the first tax period that your company would have will most probably gonna be January 2024 until December 2024. So filing of tax return or the submission would be until September 2025 because the authority have given 9 months as a grace period to do the filing and then the payment as well. The next question from Finance, is there any benefit for early tax registration? Actually, there's no specified benefit when you register on corporate tax early or on early basis. What is good for your company is that you would have an ample time to prepare for necessary documentations, as well as you do not have to worry with regards to the approval of your registration when it comes to corporate taxes. So again, it is advisable to proceed with the registration as soon as possible, although you have the time until before first filing of your company.
The next question from Francis. Individual owner of property who have VAT registration and have the rental income needs to register the corporate tax or not? So employment and personal investment income are not intended to be within the scope of the corporate tax. So as of now, no, it's not required because it's out of the scope of the corporate tax because it's a personal investment. Next question from Betty. For company that are tax exempted, zero rated, etc., do they also needs to file for corporate tax? So I believe this zero rated and exemption are you talking about in relation with VAT, but corporate tax is totally different taxation. It's not related to the VAT. And if once you registered in the corporate tax, you need to file. It's mandatory regardless of zero rated the exemption. If the tax exemption is the corporate tax exemption, then you are exempted. But if you're talking about the VAT exemption, no, you are not exempted in the corporate tax if you are in tax VAT exemption. The two both exemption are different. If you falls under the corporate tax exemption category, then no need to file and no need to do the registration. But if you falls under the VAT exemption, then you need to check whether you falls under the corporate tax exemption or not. If not, then you should register and file in corporate tax. Next question from Marina. When you registered, does that mean that you have elected to be under regular corporate tax CT, even when you are supposed to be exempted? For this kind of clarification, we are providing one service that's called assessment and registration. So we are not doing the registration upfront. First, we are doing the assessment, and in the assessment, we will check whether your company falls under the exempt category or normal category. If it's exempt category, then no need to do the registration. If it's fall under the normal category, then we should do the registration. So for this kind of case, you should contact our team, and they will let you know. Thank you. Next, Baba Femi. But can the registration be done under the same FTA account? Yes, but not the FTA. Now it's upgraded the Imara portal. So you can do the registration through the Imara portal. But we always recommend go with the professionals, either the tax agent or agency. Next question from Didier. What about offshore companies? For offshore companies, still we are waiting for the cabinet decision. We are waiting for more detailed cabinet decision on the offshore companies. But as of now, I don't think so it will be applicable on offshore companies because they don't have the permanent establishment inside the UAE. And offshore jurisdiction is the outside the UAE jurisdiction. So I don't think so. This is our personal assumption. We are still waiting for the authority cabinet decision. Once we will have the cabinet decision, we will give you the more information about the same. Next question from Sajan. Is it required in free zone companies? Yes, it is. It is required for all the entities regardless of their zone. Next question from Baba Femi. Our financial year end in July. Will our first filing be in June 2024? No, if your financial year ending with July, so in that case, your first financial period will be start from 1st August to until 31st July. So not in June. So you need to file after 9 months. So there will be a 9 month grace period. Within 9 months, you need to file. So that 9 month period will be start after the July 2024. Next question from Mr. Pratik. Can you please answer the below question again? Is there any website by the government or book which we can refer in English to get a better understanding? Yes, as I mentioned earlier, there is a tax.gov.ae, the FTA website, or you can also go to the ministry website, Ministry of Finance website. You can find the guidelines and the book, the referred cabinet decision, everything in their website. But we always recommend to go with the tax agent and agency. So we will most probably, if you will have any kind of doubt related to that particular article or chapter, you can contact to the tax agent or agency, and we will help you for that.
Next question is from Melvin. Are all companies required to have their financial statements audited by external auditing firm before filing the income tax return? So only those categories that we have discussed a while back would be required to have their financial statement audited by an accountant or an auditing firm, which are those taxable persons with revenue exceeding 50 million AED, as well as qualifying free zone persons.
I would like to add one more point in the same question. And upon the authority request, the other companies, it depends upon the authority. Anytime authority can request for the audited financial statement. So in that time, you have to submit the audited financial statement. And rest, as Ms. Kurt mentioned, these two categories needs to prepare and submit the audited financial statement. The last, no, not last, the second last question from Mr. Pratik. Our company was incorporated in free zone in 2020. We have maintained the books of accounts from 2020 till date, but we have not got the financial statement audited. Are we required to get the financial statement from 2020 till date to be audited? It's totally depends upon, first of all, your zone and your category. If you falls under the qualifying free zone person, then maybe you have to submit upon the authority request. As per now, authority, they will check your last previous, the first first financial year, not 2020, after the corporate tax implementation. So for example, if your financial year is started from January to until December 31st December, so in that case, the authority will request the audited financial statement from 1st January 2024 to until 31st December 2024 in order to file the corporate tax return. But again, it totally depends upon the authority. They can request any time, any of the moment, and it's very difficult to do the audit without doing the previous year audit. So it's better if you can do the, if you falls under the qualifying free zone person category, then you should, it's highly recommendable, you should go for the audited financial statement from 2022 until now. If you not falls under these two categories, qualifying free zone person and 50 million revenue category, then it's not required as of now. But once authority will ask, then you have to submit. We have the last question from Mohammed Kuti. Only PNL and accounting filed. So as per the corporate tax law, you have to maintain the proper books of accounts. And in order to maintain the proper books of account, you have to do the proper accounting system, and you have to prepare the financial statement, including the PNL and all those things. So, but your filing must be based on your financial statement. So you have to maintain the proper book of account, and you have to prepare your financial statement. And either is audited and non-audited. It totally depends upon the your zone.
Next question is for Mr. Siraj. How does the capital gain of a company treated in UAE corporate tax? Till now, there is no capital allowance scheme yet revealed by ministry, and we're still waiting for if any other conditions have to be implied by the ministry for this one. But till now, the any kind of appreciations in the property value, fair value appreciations, as per IFRS will be accepted. Question from Mr. Yash. Exempted person also required to maintain all records to maintain their exempt status. Can you please explain more? Yes, it is very important for exempted people to persons to maintain the records, because even the exempted persons, if they are earning any non-exempted income, any business income, they will have to apply corporate tax on it. So it's very important for them to maintain the record to prove to the authority that they are complying with the conditions under which they are being given the exemption. Next question from Ms. Shilpa. We have a major business in mainland. If we divert some to free zone, will it be liable for corporate tax as a group? First of all, to clarify you, qualifying free zone persons cannot join a tax group with any other, like with a mainland group, for example. So you cannot divert your business to free zone just to get the advantage from a corporate tax, because the conditions of being qualifying free zone and availing the incentives given to qualifying free zone will not allow you to form a tax group with a different with a non-exempted person.
Okay, I think there's no more questions that being sent right now, so we'll now wrap up this session for today. Just to advise you guys, we would be having a collective webinar session relating to corporate tax. So we would try to explain in details all the chapters that I have mentioned a while back for the explanatory guidelines on corporate tax law. So we'll be starting it starting next week. Probably on a month, we would be allotting 3 weeks or 3 sessions to discuss about the corporate tax these chapters that was mentioned. So you could visit our website or as well as our accounts on social media to be keep posted on our schedule or the topic schedules as well. So again, we thank you guys for joining us for this week's webinar, and we hope to see you once again on the following week.